And my guest today is Edward Mehrez. Edward is a co-founder at Arrow Markets. Very interesting. They're building out the next generation of options markets, kind of like a hybrid options protocol. It's built on Avalanche. We'll learn all about this today. Welcome to the show, Edward.
Hey Andy, thanks for having me. And I thank your whole viewer and listenership that's out there for the crypto conversation. I'm looking forward to talking more about Arrow markets and more about the broad market and options in general.
Fantastic. I'm looking forward to it as well, Edward. As I understand it, we just need to read a little disclaimer note here at the top of the show, and I'll just do that quickly myself on behalf of Edward and I suppose his team. But of course, listeners, as you should know, this podcast is for informational purposes only and is not legal, tax, investment, financial, or any other type of advice. Nothing contained in this podcast constitutes a solicitation, recommendation, endorsement, or offer to buy or sell securities, financial instruments, or digital assets of any kind. This podcast contains information that is of a general nature and does not address the circumstances of any particular person. Readers or listeners should assume the sole responsibility of evaluating the merits and risks associated with the use of any information contained in this podcast before making any decisions based on such information. As you should know, there are risks involved with any investment, and any investment or investment strategy involves the risk of loss. Past performance of any asset, whether a traditional investment vehicle or otherwise, is not a guarantee or predictor of future investment performance. And with that out of the way, welcome back to the show, Edward.
Well, I know that's a mouthful, right, Andy? That
It is a mouthful,
that's
but
me.
I know sometimes these things need to be done, especially because you're based in the US. But look, let's get you to introduce yourself, Edward. That's what we do at the beginning of the show. So it'd be good if you could please, as I say, introduce yourself and just tell us a little bit about your personal and professional backstory, what you've been doing in the lead up to co-founding Arrow Markets.
Yeah, before Arrow Markets, I was a PhD candidate in financial economics at Cornell University, where I was doing research at the intersection of financial economics and artificial intelligence. So while I was there, they have both a great economics and AI department, but they also have a great blockchain department at Cornell. And I got bit by that bug while I was there. This was sometime around 2017 or so, 2016. Of course, it was in the also the lead up with all of the excitement on the price action, and Bitcoin was starting to be everywhere. And I remember actually even as far back as like 2013, 2012 or so, I remember my friend talking about Bitcoin in our program, and I was like, "What the heck is that? That sounds wild." And but it wasn't really until 2016, 17 that from talking to more people around in the CS department that I really started to get interested in it. So I was lucky enough to be in that environment, to know people like Eamon Gunser, who then co-founded Avalanche, and be able to take courses from them, to discuss, to chat with them, to really understand the technology at a fundamental level. And that really brought into the fold my passion for blockchain. So I really like to stay at that intersection, between blockchain, between finance, between AI. And I really do, for the longest time, I've thought, okay, there are great ways to intersect these, although it is very challenging to find those ways, but it is the testing ground for all such innovative ideas. So really passionate about that. And in terms of how Arrow Markets came about, um, we'll get into that a bit, but options were really an awesome thing that was lacking, and it still is lacking in DeFi. So that was really where that idea came from, and I'll talk a little bit more, I'm sure, about that as we go on.
Yeah, absolutely. I think this is probably a good place, Edward, just to, yeah, for, I mean, anyone that's a trader would be very familiar with options markets, but not everyone is a trader. So perhaps just, yeah, give us a little bit of I guess a background, if you like, as to what we mean when we say options markets, and I suppose from your perspective, why you think that's interesting, and why it has been a little bit lacking to date, as you've identified in DeFi.
Yeah, it's super interesting actually. Before I went into I started this foray into options markets. I was very much involved in the global macro space. So I was doing consulting while I was a PhD candidate and internships, things like that, in the global macro space at hedge funds and for hedge funds. And there was one boot camp in particular, the IC3 boot camp at Cornell, which really attracts a lot of big talent, a lot of very smart people. Vitalik would attend it all the time, and there were only like about 30, 40 people who would attend. So it was a great opportunity to be able to discuss different ideas in blockchain and also crypto econ in general. A lot of people were interested. Okay, what's going on? DeFi summer was like just around the corner. This stuff was coming on. And well, at one of these boot camps back in 2020, 2021, I, along with Patrick Kiefer, who was a collaborator of mine from UCLA, he was doing his PhD at UCLA Anderson in financial economics, we saw that there were swap exchanges, but there weren't really derivatives at the time. Perps were just starting up, you know. But things like options, they were just kind of murmurs of it. People were exploring this, they were looking at it, but it didn't take off like it had in TradFi. And remember, this was also coming off of the back of like Robinhood coming up and a bunch of retail getting super excited about what options were and what they enabled in terms of your investment thesis and strategy. So we looked at that, we looked around and we said, wow, this is really interesting. Maybe we should try to just see if we can create option contracts on chain. And from that seed of the idea, a little bit later got started Arrow Markets. So that's where it came from. And in terms of options, to give your listeners and viewers a bit of an idea of how options work, there are two main types of options. There are call options and there are put options. With call options, they are a bet past a certain reference price, which is called a strike price, at a certain expiration time, that the price of some asset will go above it. So as an example, let's say with Ethereum, let's say that it's at $3,000. You can take an option that has that strike price, that reference price of $3,000, has an expiration, let's say a month out, and the price in a month from now that's above $3,000 will pay you out whatever the difference is between 3,000. So if it ends up at 3,500 in a month, you'll get 500 bucks. And it's important to note that it is not the same as holding the underlying. And it also has something called embedded leverage. You buy this thing for cheaper than the underlying. So you could buy it, let's say, for about 10% the cost, of like $300, 400 bucks for an option like that. But then you get the same payout as holding the underlying for over that month. But where is it risky? Where are the, what are the cons for it? Sounds great. As this thing called embedded leverage, and you can just hold on to it. But unlike, let's say, Ethereum, you can't just hold it past that month. It expires after that. So if you're out of luck and it goes to 2,800, well, yeah, you don't owe anything. You don't owe that 200 bucks that's below 3,000. But also your opportunity to capture the upside if anything happens after that month, like let's say it goes to 3,500 in 2 months, you're out of luck. So it is a double-edged sword. It provides you with this nice leveraged opportunity, but there are risks that are inherent to it. Now, compared to something like perps, I always like to say it's like non-liquidatable leverage if you're taking these perspectives. Because I gave you the example of a call option, but there's also a put option, which is on the other side, the flip side. If it goes below a certain reference price, then you get paid that difference. So again, let's say take that example, anything below $3,000, if it goes to 2,500, for example, in a month, you'll get paid that 500 bucks. So you can take both long and short exposure with these different types of options, with call options and put options, but you're still buying these assets and holding them. You don't, as the price goes against you, like let's say in the example of the put option, it started to go up to 3,200 a week from after you bought it. That's okay. You don't have to pay that money. Whereas with perps, you do. You got to put more money in order to keep your position. Otherwise, you'll be liquidated. And the more you leverage, the more you're going to have this issue. So that's not to say that the options don't lose value when the price goes against you. You can't sell them back for as much to other folks on the market, but you can wait and see. So I like to use the corny line from all the infomercials. You can set them and forget them. Um, but you should definitely do more due diligence than just forgetting about the options that you have on your book. But it conveys, that they're non-liquidatable. So that's one of the awesome things about options. And it's one of the reasons that they're bread and butter for traditional finance. In traditional finance, retail people, Wall Street bets, that is their weapon of choice. They love options. And this is despite there being futures as well. This is for the I'm talking about the US audience, but this is also the case across many different countries. So it's not just the US. This is a broad spectrum type of phenomena. And I think that if you give people the choice of a good options venue, then compared to futures, they have great merits. So we wanted to bring that type of experience to the crypto world.
Yeah, that's look really well articulated, Edward. And just one other point on options, I guess, is even though as you've said, it's very much favored by I suppose Wall Street, traditional markets, however you want to talk about it. But options are also, there's some quite specific use cases where options are the perfect trading instrument, really, like often used by people that need to hedge a particular scenario, right? But
Absolutely. So there's a couple of things that are pretty darn unique to how options work. And it's actually where the inspiration from our name came from. We're not obsessed with bows and arrows. I promise everyone, who's listening or watching. It is actually from the famous economist Kenneth Arrow. And one of the things that he did was he demonstrated that if agents in an economy, if these different traders in an economy had a set of very rich financial derivatives. He was talking about binary options for his model, but if they have a very rich set of options, then they can achieve the best types of outcomes for themselves. They can attain their financial outlooks in the best way. That includes hedging, betting on volatility. These are things that you can't do with something like a future alone or the underlying, because we like to call them delta one assets, those things. But with options, you can say, hey, look, I don't know if it's going to go up or if it's going to go up or it's going to go down. But hey, I got a feeling that the market's going to swing. It's going to swing one way or the other. And you can take a view on that with options. You can get both that put option and the call option together, and it'll give you a payoff if the market swings out wide enough. Now, of course, there's a flip. If it just kind of pitters out the asset, you'll lose because it's low vol. But it's a market neutral strategy, and that's something really cool. You could also take a perspective on that. If you think the market is going to go sideways, for instance, like the market had done for so long until we hit this big bull run, you can take that perspective as well. Or for hedging purposes, let's say you want, let's say that you're worried about losing anything more than 10% on an asset, let's say like Ethereum again. Well, great. You know what you could do? You can get a put option. We call it 10% out of the money. So that what that basically means is that the strike price, let's say again, 3,000 is the reference price. That's what Ethereum currently is. You can pick a strike price of 2,700, which means that you'll get paid for every dollar that it goes below 2,700 at expiration. So if you want to hold your asset for a month, 2 months, whatever your horizon is, you can pick up exposure like this and know, okay, well, in the worst case, I'm going to lose out 10%. And I've bought insurance for myself for anything below that. Now that kind of ignores some things like counterparty risk and stuff like that, but I would like to convey to users that it is really important that you see that options can be used in all sorts of ways like that. You can even if you have a short position, you can actually get the call in a similar type of way to hedge against the upside. So if you already have per positions and you wanted to have some kind of hedge against that, you could also do that and get paid off with a call option. So it really does allow if you're really paying attention to what you're doing and you're being very careful with your investments, it really allows you a way of purchasing insurance or taking views that you thought weren't possible before and being market neutral.
Yeah. Thank you again, Edward. Great to kind of dig into options and have a proper options nerd here to walk us through it. So look, let's just briefly. You said Avalanche at the beginning. It's built on Avalanche, and I can't remember what you said, but so that's why I guess I'm circling back. Just explain why we've decided to build Arrow on Avalanche.
That's a great question. One of the main reasons, of course, was because I was in that environment and I saw the team that worked on it. I saw all the hard work they did. I knew that they were adaptable, and I also knew that it was based on a great consensus mechanism, where it's not like a layer two. It's not where you get more and more centralized. It's actually very decentralized. It's one of the most decentralized chains in terms of its validator network. And but it still is extremely fast. And a lot of other protocols, it's not like that. You got to make a trade-off, right? You got to be like, okay, well, there's less validators, so things can go quicker, it can be speedier. But they came up with a really interesting, innovative sampling method where they sample subsets of validators in order to come up with consensus. And so that's really cool. I loved that idea. And I know that Patrick and the rest of the team, so a lot of us are actually from Cornell as well. We were pretty enamored with it. That was the initial decision of why to go with Avalanche and everything. Of course, as time goes on and we see how the landscape is evolving, there are a bunch of very, very interesting L2s and L1s. So I don't want to knock any other chain that's out there. But I will at least tell you that was the reason that we chose to go that route. And but there are a ton of very, very smart and very capable layer ones and layer two teams out there. So want to give them props too.
Yes, indeed. Thank you, Edward. So if we go back to Arrow, and I've just been looking through the website, listeners, of course, link is in the show notes, but it is simply arrow.markets. And so, the kind of the first message that you get is options simplified. So you kind of get the idea that you're trying to create an on-chain options market, but there are like any good trading platform, there's kind of a simpler option, I guess, and there are more sophisticated options. I guess the cool simple, or as you guys call it, the light mode, right? There's light mode, there's pro mode, but light mode. Talk us through light mode. It looks really, it's quite elegant. It's quite simple. It's quite seamless. It's a really nice looking interface, and when you first go to the website, the website just shows you how it works. But talk us through what is happening here, Edward.
Sure. And thanks for those compliments, Andy. It really means a lot to us. We worked a lot on the user experience and the UI. And this is actually one of the great ways that if you are very new to options, you can even participate within our community and the direct team and help us build. Like we do user interviews all the time and we try to improve continually. But in terms of how the light mode works, and we are kind of itching maybe for a different name because there's light mode and dark mode, and so it gets a little confused with that. But how this simplified light mode works is we walk users through who may have never used options before. We ask them a sequence of simple questions. So we're like, okay, what's your sentiment? Are you bearish, bullish? We're also going to come out with kind of a market neutral one for those vol strategies. That's coming soon. So guys, be on the lookout for that. So you first choose your sentiment. Then you're given three broad categories of strategies. And so you look at things like, okay, do you want to target a certain price? Do you want to talk about maybe if the price is going to break out from a reference price? Do you want to think about, you have in mind that there's a resistance level that something, it won't really go above this, or a support level, it won't really go below this. So all of those types of strategies, there's a few different cards for you once you pick your sentiment. You then choose that, and then you choose your horizon that you're thinking about this investment on. And then the light mode recommends a few different options for you and gives you high level summaries of them. As you click through them, you can see what the different payoffs are. You can see what the max risk is, how much you'll lose if it doesn't go well. And you can see what the max profit is. And some of them, funnily enough, for things like call options, the max profit is actually infinity. It can just go to whatever. Of course, it's very, very, I mean, it's impossible. It's unlikely that it'll go to, infinity. But that's a way that you're getting the trade-offs here. You're seeing at a high level, okay, well, this one is uncapped, the profits that are on here, but hey, it's really expensive and I can lose more. So maybe I should cap some of my upside and I should go with something that's more conservative. So, and won't cost me as much and there's less risk on the line. So those type of things, we try to help users out and experience that through our light mode. But it's really important as well for, our listeners here that once you come on the platform, once you come to Arrow Markets, in my opinion, the most important thing to do is to go to our testnet and to try out the light mode and to trade there for yourself. See how things react to different events. A Fed event might be coming along and you might think that J Powell is going to shake up the market. And then, hey, you can take a position on that. You can see how it does. You can follow it in your portfolio page without risking any real funds. So it is super important. We love the idea of getting people on and paper trading. And our platform isn't available to everyone. In fact, right now it's gated. It's in our gated alpha. The actual, to actually use your funds, it's in a closed alpha right now. Even when we're planning on potentially opening it up completely, even then there would be certain restricted regions. But even for those folks who are in the restricted regions, for example, like the United States, we would like them to still have this experience that you can become more financially literate here. You can get a sense of how options work. And not a lot of platforms have that, especially in crypto. So we really want people to understand this is how the assets work. Let me play around with it. The best way to learn is to do it yourself and to get a sense of how they work.
Yeah, look, that's really well said, Edward. And I love the idea that just you can indeed access paper trading mode just very simply as soon as you do go to the website. And yeah, because if you're not an experienced trader, sometimes paper trading is the way to go, just to learn how things work, get some experience, and if nothing else, many people will find out perhaps trading is not for them, but it's best to find out. With play money if you like, but of course some people just have a natural affinity for it, and it's that you start playing around and you can quickly get an idea if trading is for you, and specifically options trading. Just I guess closing the loop on options tradings, we had in our notes that we talked about, Edward, two other great examples. You just mentioned, the Federal Reserve and their constant signaling as to whether those interest rates, what is happening there? When will the next cut be? That keeps getting pushed back, it seems. How would you play something like that from an options trader point of view? Another example we talked about is something like the Bitcoin halving, the kind of big potentially market moving events. There's always that argument: is something like the halving priced into the market? Eventually, maybe not. Maybe no one. It's a debate. But how would you approach that as an options trader, Edward?
Yeah, so with the Fed, that one's difficult. Right now we're in a macro environment where it seems like inflation is just not cooling. So if you're somebody like myself who thinks that we're going to be surprised with more hawkish moves by the Federal Reserve, markets are going to freak out. And that includes crypto because it's a high beta asset. And for those listeners who don't know that term, basically what it means is, let's say the S&P 500 goes down by $1. Well, crypto oftentimes will go down by $3 for that $1 move. So it's this kind of like linear relationship between the two, but magnified, you know. So that's on average, that is the relationship that happens. It is just kind of the magnified NASDAQ or S&P 500. And especially when Fed events come through, it just permeates to every market. Now, of course, it could be that it just so happens that with this halving cycle that is coming in, people are like, hey, this asset is getting more scarce. And I see that the Federal Reserve is also printing a bunch of money. Let's just switch over to crypto. I'm very skeptical of that position, of course, in which case crypto would pump and the, you know, like normal markets would just tank. Um, but there have been periods like that that have happened before, maybe not because people thought that Bitcoin was necessarily going to replace the dollar, but it's still important to note that they do decouple sometimes. So how could you play things like this? Um, well, let's take that Bitcoin halving example. Let's say, well, yeah, you might think it's priced in, uh, but at the same time, when we've had these halving cycles in the past, there's been three of them. Two of them coincided very clearly with big macro liquidity events, like good ones, great ones. One of them, 2012, quantitative easing, and the ECB was like just throwing money at markets and things were just, you know, on fire. The second one, 2020, was all the injections from COVID stimulus. So on average with these three, 2012, 2016, 2020, there's been about a year and 3 months super cycle that has been established. But for people like myself who are quants and have that background, three data points is like nothing to base much. You don't want to go crazy with investments if you have three data points in the past. So that being said, you could think nowadays that, hey, you know what, it might rip. Maybe it will follow the pattern like before. And, you know, people, for whatever reasons, maybe animal spirits even, that people just believe, even though they already knew it was coming, et cetera, might still rip. That's one. The second is, hey, look, we're in a crazy macro environment. We had 6 months run up. You know, Bitcoin hit an all-time high again recently. Um, so because of those reasons, you know, we already see it's coming off that high and everything. Maybe it's going to tank. So in either one of those cases, again, you're with this volatility play. You don't know the direction, but there could be big swings that come about. If you have that perspective, then options give you a great opportunity to take that view with things like a long iron condor or a short iron condor, depending on if you think it's going to swing a lot or not. And then things like straddles and strangles. And I just suggest that your viewers and listeners go look up those things. I wish I could actually show those diagrams and everything, but I don't want to take up too much time on that. But there are these opportunities that you don't have to take a specific view, and you can still very much benefit from it. And things like the halving, people have all sorts of expectations of it that might be disappointed, and you might get surprised at how much things might really tank because of that.
Mm.
Um, or, you know, they could rip like in the past, but in either case, you can be covered.
Yep. Again, just really well articulated, Edward. Look, as we finish up this part of the podcast, again, just tell people where they can go to look at Arrow markets, maybe play around with some paper trading, and just explain how that, I guess, the timeline of the product rollout, how you see that taking place, and what people can do to stay engaged in the meantime.
Yeah, so definitely come to the platform. It's arrow.markets, like Andy mentioned earlier. You can get involved in our Discord, our Telegram, or our Twitter community. The best place to get super engaged, though, is the Discord community. That is where a lot of our content moderators, a lot of our you know, ambassadors are looking for folks who can give feedback on the product, can give different ideas of what products they would like to see. We are very open to these things, and we're very much focused on building with the community. So that's the best way to get in touch, to work together, to try out the product on our website. And in addition to that, in terms of timelines, there are a few things, but we are working on getting out different underliers. So right now we have ETH and BTC. We want to extend those very soon to other crypto underliers. Um, and we have a few announcements that are coming out in terms of also our token launch. So that's on the horizon. We're really excited about that. And as well as some developments for margining systems that have the ability to cross margin between things, like different options, give you capital efficiency that way. And so it'll be a really nice opportunity for users to not only go long options, but also short them while maintaining a degree of safety on the protocol. So we're looking forward to those, and those different announcements as well as different research will be coming out in the next couple months. So stay tuned, look out for those things, and looking forward to interacting with you guys at a more individual or personal level and part of our Discord community.
Awesome. Thank you, Edward. I think what we do now is we go to a very quick break, and then we'll come back. We'll have some fun. We'll finish off by running you through the very famous crypto conversation hot take round. Back in 1 second. And boom, we are back, and I'm with Edward Mehrez. Edward is the co-founder at Arrow Markets. Yeah, building out the next generation of options markets on chain, on Avalanche. Yeah, look, Edward, I like to finish each podcast with a quick round of rapid fire crypto conversation hot takes. Are you up for it?
Oh boy. Hmm. Yeah, let's do it. Let's
Let's
go.
do it. Edward, I'm just going to run some questions at you. No right or wrong way to do it. Yeah, question one for you. Where would you say that you sit on the Bitcoin maximalist to multi-chain opportunist spectrum?
Oof. Boy, I really see it as different chains have their place and can carve out their own niche. Bitcoin, for instance, it's probably the best positioned to be a international global currency that's completely transparent, and it's very powerful because things like settlement, things that often takes a long time with banks or remittances. All these things can be really sped up and already have been by Bitcoin. So that to me, it's already been demonstrated with Bitcoin. But if you have something like Ethereum, I mean, you have programmable smart contracts, you have commoditized compute. And I know these things are also coming to Bitcoin as well. And there's like layers that are being built on top of it with that. But that was really the great innovation of Ethereum. That cannot be understated. That really opened up the doors for things like decentralized finance and for all other sorts of different contracts to be created and tied to other assets and have things like real world assets. So yeah, for me, different chains do different things. And in the meantime, I mean, I think those two have already been established. I don't think ETH and BTC are going anywhere. I think those guys are just, the market fixtures.
Yep.
But everything else that's out there, they're still vying for different niche markets. And we're going to see where the dust settles there. And with things like we already talked about with things like Avalanche, you have these opportunities where they really improve upon things like the speed, the costs, right, the gas, in a very decentralized way. And those are really exciting. So we're going to just see more and more of that. But at a high level, I would say that those two aspects of like the digital currency, the public ledger, and then on-chain compute, building on top of it, but then having open finance, which really is what the whole smart contract revolution did. Those are the two highest level innovations, and those aren't going anywhere.
I like it. Very much agree. All right. Edward, what would you say is your firmest conviction crypto opinion?
Oh boy, firmest conviction. It comes down to that what we just talked about. It literally is this perspective that open finance has the potential to even entice the most staunch regulators that are out there, once they come to the perspective that they can fork a whole system of financial integration that's decentralized and get real-time fragility calculations and updates. And you can't do that in normal markets. Everything is obfuscated. So my strongest held belief here is that you can, even though it seems like it's the Wild West now, we can harness this very open sense, the transparency of decentralized finance, and even bring on regulators to say, hey, look, this is a better way to do it. This is more transparent. And you can real time monitor financial fragility. And it's kind of it's a little bit of a controversial perspective because I think a lot of the time in crypto, we're often thinking, oh, okay, it's kind of us against them. We're the revolutionaries. We're this and that and blah, blah, blah. But at the end of the day, regulators really do help a lot in getting a system safe. And that shouldn't be underplayed too much. Like we should push against the boundaries, but we should also be trying to work with them in order to say, this is the promise of this technology. We want things to be more open and we want the financial system to be this way.
Yeah, yeah. Nicely said again, Edward. Look, Bill Gates famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. As you know, 10 years is a very long time in blockchain, but just look, anything you want here, DeFi, options trading, on-chain trading platforms, Avalanche, what does it all look like in 10 years' time?
Well, honestly, that's actually where I see AI coming in more and
Mm-hmm.
more. Um, AI is having a huge revolution now, and we're just going to see that increases over time. And there needs to be a financial marketplace for this. There's going to be a lot of relegation, like a lot of the AI systems that are in place to actually benefit from them. It's going to be the case that those who own them in some sense are going to be the ones who benefit greatly from them. And it may actually be necessary from an economic perspective that in order to stop that accumulation and concentration of wealth, that we need to decentralize those algorithms more and more, but particularly the proceeds that come to them, as well as encouraging the development of them. So people who are out there who are professionals, who are coders, who are scientists, we need to make sure that yes, they are going to be uh, they're going to be compensated. They're going to develop these things, but at the same time, people can have a stake in these systems. They can own capital in them. Now, the problem is that if you look around right now at the AI, different AI companies that are out there, take like Anthropic, take OpenAI, Mistral, any one of those, a lot of them are private. They're going to stay that way for a while. They're going to stay private. And the only one you can really invest in if you want to, well, it's not the only one, but one of the big ones is Google, right? With DeepMind and everything. Tesla also has their AI division as well. But you don't really get a direct exposure to AI there. Google has a bunch of other divisions. Tesla, produces electronic cars. And right now we're going through a period where EV is getting hit while it's down. So you're getting very imperfect type of exposure there. Whereas on chain, you can have people actually developing these AI algorithms, doing different tasks, and then those AI algorithms getting paid, and then the shares being distributed to those people who are the direct investors of them.
Yeah.
And that's really where I see the future going is that, we're going to have these different AI agents doing different things. We have opportunities to invest in them. We have they're tokenized, right? And things will be happening so fast that we can't just wait for like, okay, Anthropic in 10 years to IPO. Like maybe by then it's too late. So um, you want to have this type of real-time market where we're valuing these things and also getting people who are scientists or developers to kind of understand like, oh yeah, people like this type of algorithm or that type of algorithm. And you can even have on-chain voting for this type of stuff, not just dollar voting, but actual voting. So I think there's an exciting, really, really exciting future for that, but it's going to be a while. I'd say we're starting it now, but it's going to be a while until that gets full-fledged and mainstream.
Yes, indeed. And look, it brings us nicely, Edward, to our final question, which is, what is your favorite science fiction book, film, or TV show?
Oh boy. I think I'm gonna have to go with 2001: A Space Odyssey.
Yeah.
Hal is classic in
Yeah.
there. So yeah, I'm gonna have to say that. Love that film.
Oh, that's a great choice. And I suppose, yeah, HAL 9000 is kind of where a lot of the, if we think of, dystopian AI gone wrong, HAL is one of the kind of
Yeah,
iconic early examples. Yes.
it is great. And one of the things that always hit me that was so interesting is that, oh boy, this is a bit of a spoiler. So guys, if you want to like shut it off right now, go watch the 3 hour 2001 and then come back at this point. But there's a really classic scene where HAL 9000, he's being like deactivated. He did some really terrible things and he's being deactivated. And while he's being deactivated, he's pleading with the person who is deactivating him and saying, please don't do this. I can feel myself. I can feel myself losing myself. I'm losing my thoughts. And then he regresses or they regress to a childlike state where they start singing like the first song that they ever learned from their creator. And even though the AI had done such terrible things, like you really feel for it then. You feel like they did these things because of fear or thing like very, very human, more human, in fact, than the person who was being affected. The person there is stone cold, is so unaffected by it that you're like, oh wow, maybe we've evolved into something else, something maybe even worse potentially. So it's really interesting. Like it's that from that perspective, it's a great film and super ahead of its time with
Couldn't
that.
agree more. I couldn't agree more. Thank you, Edward. Look, just to close it out, thank you so much for coming on the show today and spending some time with us. Just again, tell people where they can find you on Twitter or wherever else you like to hang out online, and yeah, where people should go to, yeah, Arrow Markets. What should they do?
Yeah, for sure. You can find me on Twitter, just Edward Mehrez. It's easy. You'll be able to find me on there. And if you want to follow us, we're Arrow Markets at Arrow Markets. So that's another easy one. And Arrow.markets is the URL. So please come visit us, join our socials. And yeah, I'd appreciate a follow too, of course. So thanks so much, Andy. Appreciate being on the podcast. And thanks to everyone listening and watching.
Awesome. Thank you, Edward. All the best, and bye for now.
Bye.
All right, there you go. That was Edward from Arrow Markets. Fantastic. Yeah, Edward, very smart guy. Great to get his perspective on options trading. And of course, yeah, HAL 9000 from 2001, A Space Odyssey. Yeah, lots to dig into there. Links, of course, are in the show notes to Arrow Markets. But yeah, that's the end of the show, folks. Thanks for listening. This was the Crypto Conversation for Brave New Coin.